the nat gas markets had a challenging week, experiencing a notable drop. While the recent market noise was driven by hurricanes, the disruptions have passed, and the U.S. nat gas industry remains resilient. Now that the storm impact has been minimal, we're seeing some profit-taking, with speculative money pulling out. I expect value hunters to step in around the $2.20 mark, likely triggering a bounce. Until then, the market appears to be in a state of exhaustion. However, it's important to remember that this market is highly cyclical, and with winter approaching and colder temperatures expected in the United States, demand should increase. The latest storage surplus forecast has turned bearish, with nat gas inventories expected to increase by 250 billion cubic feet between October 12 and November 8, a bearish 46 billion cubic feet larger than the 5-year average. If this projection holds, inventories will climb to 3,955 billion cubic feet, widening the current surplus over the 5-year average from 163 to 209 billion cubic feet. This is largely due to demand destruction caused by the recent hurricanes, along with forecasts of unusually warm weather across much of the U.S. for the end of October. It's important to point out that the recent price spike was purely speculative, as is the current drop. The realistic average price for natural gas is around the $2.40 mark, so we can expect prices to break through this resistance sooner rather than later. Meanwhile, the gas rig count continues to fall, with a drop of 2 rigs on Friday, signaling an early bullish indicator as we head into the high demand season. Looking ahead to winter, La Niña could bring colder conditions compared to the last 2 mild winters, which kept storage withdrawals for space heating in the U.S. lower than usual. I expect a trend reversal soon due to 2 key factors: oversold technical conditions and, more importantly, the projected storage surplus increase is likely already priced into the recent price drop. Traders are now waiting for colder weather forecasts, which may arrive next week or by the end of October. Historically, prices tend to rise in November as winter weather forecasts begin to drive the market. With weak demand from unseasonably warm weather and strong storage levels, the short-term outlook for natural gas remains bearish. However, I expect the price decline to be short-lived, driven by the fundamental factors I mentioned earlier. From a technical perspective, the $2.15 level below is providing strong support, so I would expect a price reversal next week or at least the price stabilization above this support. On the upside, the initial resistance is the 50-day moving average currently at $2.38, followed by the next main resistance at the $2.50 level. Overall, if bulls can hold the $2.20 support zone, a trend reversal is likely, as value hunters may step in with the high demand season approaching. Please like, subscribe, and comment to support the channel. See you in the next one.